Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. Today's Thursday, January 29th. So we'll pick up where we left off. We left off with the market staging a breakout day yesterday, closing with my short-term indicator very overbought, which I talked about for the last 2 hours on my blog, saying that somewhere along the line the market needed to pull back, and pull back it did today. So it came as no surprise to us. Maybe it pulled back more than most people would have thought. I probably would have guessed maybe 120 to 150 points. So we got 226, but no problem. There's even some more wiggle room for the market to pull back even a little bit more if it need be in the morning. But my indicator is very oversold. It says oversold, as it was very overbought on last night's close. So somewhere along the line we need to get a rally going again. We're just too oversold, and the process will continue from oversold back to overbought. So you may say, well, how can the market rally with the way it closed so ugly? They say the market has no memory, and I believe it does not. The market's not going to remember tomorrow what it did today, or how it closed softly. It just doesn't remember, and that's why the game is so difficult. And the only thing we have to go on is our indicators. And like I said, my short-term indicator is very oversold, so I'll be looking for some sort of strength sometime tomorrow. What else? We'll take a look at the major indexes. I'll show you the more wiggle room the market has if it needs to be on the downside. I'm not going to highlight anything new because I've got too many positions. So I think starting Monday, until I can highlight some more stocks, I'll start answering some questions, at least one a video. So if you have any questions that you think the general trading community might be interested in, send them on in, and I'll spend some time trying to answer. Now, I'm not going to be able to answer all of them, obviously. I'm probably only going to be able to answer one a night. But that's what we'll spend the time, instead of highlighting stocks, until I'm able to move some of these positions out of my portfolio. Okay, let's go take a look at the major index. Okay, we're looking at a daily bar chart of the Dow. We watch this every night, so I know you're very familiar with this chart. But it's a way of, it's like a roadmap. It's a way of tracing out the market. This is today's pullback. This was yesterday's breakout. Some people may call this a mirror image. It's almost the exact opposite of what happened yesterday. Closed on the high, closed on the low. But I'm looking at it from the point of view of it being at a very important support area, and I see this as an ascending triangle. And those of you who have been watching me for a while know that these triangles, they initially break out of the triangle like this one did yesterday, and then they pull back. This is not unusual, and there's even a little bit of room for it to diggle around down in here for a little while if it need be. But the triangle is still intact, and totally nothing unusual about this action at all. Okay, here's the Russell 2000. Similar look. Breakout day and then a pullback. And if I can get the right tool, I also see this is a triangle also. And yesterday being the breakout and today the pullback. And this is the SPY, which is basically the Standard & Poor's 500. And a similar picture. We've got this ascending triangle being formed. We had our initial breakout, and then we had our pullback. And like I said, it could probably even pull back, down into here somewhere if it need be. I think we'll have a better day tomorrow, but if it's weak in the morning, don't let it rattle you. And finally, our QQQQs. Triangle is a little more symmetrical here. Our breakout and our pullback. And this also has a little more wiggle room for it to pull back if it needs to be in the morning. Let's take a look at Google, because we have been watching it. It's sort of a bellwether stock. And let's see how much that pulled back. Okay, here's a daily bar chart of Google. Now, it didn't pull back much at all. Didn't even get to yesterday's low. What's key is getting through that old high there. And it held up very, very well. Now, there's a lot of rotation going on in the market. You know, the bank stocks probably acted the worst today, and the golds acted the best. So it seems that there's always some segment of the market pushing higher and some other segment pulling back down. And then when the segment that's finished pushing higher finishes pushing higher, then it'll probably roll over and come back down, and the ones that have been pushed down will turn around and rally back up again. So there's rotation going on in the marketplace. If you look around at different groups, you'll see exactly what I'm talking about. For instance, our Hecla Mining was up today, and a lot of the gold stocks were up today. Gold itself was up. So there's pockets of strength here and there, but it's on a rotation basis. And you know, eventually they'll come down everybody's street. Okay, that's my view of the market till tomorrow. This is TK signing off.